Hey, welcome back. Today is April 18th, Sunday, and on this post, I'll be telling about the overall crypto markets, which includes Bitcoin dominance and Bitcoin price action, and see how it could potentially affect the overall altcoin markets. Also going to be addressing that Bitcoin pullback last night and how it dragged quite a bit of the altcoins down with it. Before diving into Ankr token, Ankr USD, and see what is going on in here, I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market, according to what I'm seeing on the charts. Before I begin today, if you guys are enjoying this content, make sure to subscribe to this channel and like this video, as I'll be keeping updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 2 free stocks upon a successful sign up and a qualifying deposit of $100, and I will also get a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor and this is not financial advice. I am purely sharing my own speculation and opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you have any questions or comments, please only leave them in the comment section below, but I'll try my best to get to as many of them as possible. Now, see what's going on in this market first. Most importantly, I do take a look into Bitcoin dominance. Tells me where the money could be trending into. It would be Bitcoin and altcoins or neither. Right now, we do have Bitcoin dominance down about 0.3%. This breaks down to Bitcoin price action down over almost 6.6%. Total altcoin market cap down about 6%, trailing that behind Bitcoin. Now, this would still be what I call it the downside of Bitcoin dominance trending downwards, because total altcoin market cap is still affected by that Bitcoin pullback, just not as much. Okay. I still usually emphasize Bitcoin dominance trend downwards because that's generally speaking better for the altcoins on both the upside and downside. Because conversely speaking, if Bitcoin dominance was trending upwards, Bitcoin pulls back, total altcoin market cap could be pulling back by more than that of Bitcoin's. For Bitcoin dominance here on the weekly time frame, as I have mentioned, we are still in a falling wedge pattern, even though we're very close to this bottom trend line here. As I have mentioned earlier this week, that the decisive weekly candle close to tell me that this price action has broken below this falling wedge pattern, we'll be seeing price action to close at about 51%. That would be a decisive weekly candle close to tell me this price action has broken down from this generally bullish pattern. Okay. Now we have about 4 more hours left until this weekly candle close. Let's see if we get there. Otherwise, I would follow up tomorrow. Let's go to Bitcoin. Also, just want to mention one more thing. If Bitcoin dominance actually breaks to the downside, okay, of that falling wedge pattern, that's more ideal for the altcoins. Now, Bitcoin here on a weekly time frame, as I've been saying, there has been bearish divergence. Okay. For yesterday's post, on yesterday's post there, I did mention 2 consecutive higher highs and 2 consecutive lower highs. And now we have 3 consecutive higher highs and 3 consecutive lower highs on the RSI. That's still bearish divergence. And bearish divergence, more often than not, can still signal a pullback, which we have seen quite a bit of already. Okay, so first higher high, lower high on the RSI. That's 1 week's worth of pulling back here. Second higher high, and then another lower high on the RSI. Another 2 weeks worth of pulling back here. Another one here, a third higher high, and lower high, and you guys get the point. On the 3-day time frame here, as I have pointed out yesterday, that there was a rising wedge pattern. Rising wedge patterns are generally bearish patterns. Okay. Now, the measured target of that rising wedge pattern was about 47.5K, adjusted for yesterday's breakdown point. Now, price action did get as far down as about 51.5K before getting supported by this 3-day 21 MA, which I did expect to be pretty good support, which I also mentioned yesterday. because the support, this moving average, has not been hit since October 2020. Okay. Now, if Bitcoin continues pulling back here, it could still have a bearish effect on the altcoins. That bearish effect would be greater if Bitcoin dominance is trending higher. And if this 3-day 21 MA does not hold, the next level of key support I'll be looking at here would be about the 45K fit level area. Let's go over to Ankr and see what has gone on in here. I'm going to take a look from the monthly time frame down to the daily and see if we have any overbought RSI readings or possible bearish divergence scenarios on these what I consider to be macro timeframes. Monthly time frame here, we're currently about 95, so that's 95 out of 100, so that's very overbought here. Weekly time frame, we are currently at about 86 here, okay? And this weekly candle closes in about 4 hours. If we actually get an equal or higher high here, it does look like there's likely bearish divergence. 3-day time frame here, we already had bearish divergence, higher high here. Well, bearish divergence could be playing out right now still, okay? We had bearish divergence here, higher high. However, lower highs on the RSI. Now we are getting a bearish candle. A safer signal here to tell me bearish divergence is done playing out on this time frame would be seeing a higher high on the price action chart along with a higher high on the RSI. However, do mind that possibility of bearish divergence on the higher time frame there on the weekly. Daily time frame, we're currently about 59. If the price action was to make a higher high here, it does need to beat the last high RSI reading over here at about 86 to negate bearish divergence. Let's take a look into what has happened since last time. Since last time, I did mention that there was a falling wedge pattern. Measured target of that falling wedge pattern was about 21 cents. Price action broke above that falling wedge pattern, went as far as about 21, just right above 21 cents there. So met the measured target and some more before getting rejected all the way back down to about 14 cents. Now, since the breakout of that falling wedge pattern, I did also mention that there could be a development of an inverse head and shoulders pattern. I think from the last post, we had the left side of this pattern here, which is generally a bullish pattern, okay? And now I can see more clearly that there is actually the right side that has developed as well, with the shoulder levels to be about 15 cents, okay? So remember that level. Now, resistance or the neckline out of this pattern here, this inverse head and shoulders pattern, is about 20 cents because that is psychological resistance. And we have not had any daily candle closes above 20 cents. Measured target for this inverse head and shoulders pattern, which is taken by measuring from the neckline of the pattern here to the bottom of the pattern and then adding it back on top of the neckline here, will give me a measured target approximately 28 cents, slightly above 28 cents measured target here. Now, measured targets are theoretical approximate targets only, may actually be different in real life price action, more or less. Let's take a look into some of the key supports and resistances relevant to this price action right now. Key resistance immediately would be about the 20 cents top trend line here, or the neckline of the pattern. Next up, I could expect some resistance coming from about 21 cents, right under 21 cents to even 22 cents here, from past trading resistance coming from these daily candles. Next up, let me pull a reverse flip retracement here, where the 1.618 would be about the 25 cents fit level area. Okay, that's the 1.618. Now, since we do have some pretty evenly spread out resistances between the breakout point and the measured target, I'm not going to mind the 10% increments, okay, possible 10% increments where I would expect traders to take profits at those psychological resistances, because we do have some pretty spread out, evenly spread out resistances between the breakout point and the measured target. Now, key supports, the daily 21 MA, which is the blue line. Next up, about the 15 cents fib level area. If that does not hold, about the 12.5 cents fib level area. Let's take a look into the bullish and bearish case scenarios here. Bullish case scenario, price action breaks out of this inverse head and shoulders pattern, the 20 cents neckline. A safer signal here would be seeing a daily candle close above the 20 cents resistance here. Okay, that's the safer signal. A daily candle close above the 20 cents resistance. Minding some of the resistance levels I have just pointed out after the breakout of the pattern, and then go towards its measured target. That's the bullish case scenario. Now, even though it seems that we do have a short-term bullish pattern here, I will not lose track of that very high RSI rating on the monthly time frame. Okay, as the higher that gets, the higher the probability of a pullback. And one data point on there is 1 month's worth of time. Bearish case scenario. The first bearish signal here would be seeing a daily candle close below this daily 21 MA, which is the blue line here, which we have not closed below before since we have hit it. Okay, since we have hit it at about April 7th here. Okay, so that's the first bearish signal, getting a daily candle close below this daily 21 MA. But getting a daily candle close below the 15 cents level, which I have mentioned to be the shoulder level of this pattern here, that would invalidate this inverse head and shoulders pattern. I would not consider these to be part of any shoulders here for this generally bullish pattern here. So 15 cents would be the baseline for the shoulders of this generally bullish pattern. Getting daily candle closes below 15 cents would invalidate this generally bullish pattern. And the next level of key support I'll be looking at would be about the 12.5 cents fib level area. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know your agreements, disagreements, feedback. I'd love to hear them. Hope you match your risk carefully, and if you'd like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.